Hello, I am Edute Anthony, a teacher of economics with Nigerian Tulip International College. Today we shall continue with the 2017 UTME questions from 21 to 38. Question 21. Given quantity demanded is equal to 30 minus 3p, while quantity supplied is equal to 9p minus 18, determine the equilibrium quantity. Recall that at equilibrium, quantity demanded is equal to quantity supplied. First, we will find the equilibrium price and then use the equilibrium price to determine the equilibrium quantity. To find the equilibrium price, quantity demanded, 30 minus 3p, is equal to quantity supplied, 9p minus 18. Collecting like terms, 30 plus 18 is equal to 9p plus 3p. 30 plus 18 will give us 48, while 9p plus 3p will give us 12p. We make p the subject of formula by cancelling out. We'll be left with p, which is price, equal to 4. Now, at this point, we would replace the price wherever we find p in the equation to get our equilibrium quantity. If we should solve for quantity demanded, we will get the same answer as also solving for quantity supplied. So it is our choice at this point to choose any of the equation to substitute into. So let us substitute into the quantity demanded. 30 minus 3. At this point, our p is equal to 4, so bracket 4. So 30 minus 3, 3 times 4 will have 30 minus 12. 30 minus 12 will give us 18. That means we have our answer as A. Question 22. In Nigeria, industrial development can be enhanced by... How do we enhance industrial development? We could do this through a variety of ways: creating access road in order to encourage industries, providing electricity to encourage industries, and all these can be grouped under efficient infrastructure. C. So our answer for 22 will be C. Question 23. Capital gain tax is an example of... Capital gain, first, is the income a company gets from the sales of their capital asset. This income are subject to tax, and under the laws of Nigeria, they are taxed under the income tax. So our answer will be D. Moving on, question number 24. Which of the following is not a source of government revenue? We find that all the options are sources of government revenue except for personal income, disposable income, and transfer earnings. These are not sources of government revenue. So our answer will be C. Question 25. One of the important qualities money must possess is... The answer is homogeneity. Homogeneity means uniformity. Whatever item is used as money should be easily identified by all within a particular region, and that can only be possible if there is uniformity of such currency. So our answer here is C. Question 26. The graph above represents... Okay, from the graph above, we see a supply schedule, a supply curve, where price has changed from P1 to P2, also causing the quantity supplied to increase from Q1 to Q2. The answer here will be an increase in quantity supplied, not an increase in supply. The difference here is that for an increase in quantity supplied, only price is a factor capable of bringing about an increase in quantity supplied, while all other factors that affect supply can be grouped as an increase in supply. So our answer here will be C. Question 27. From the diagram above, the arrow marked M indicates, so looking at the diagram, we see a two-sector model of national income, the household and the business firms. The households are responsible for providing the labor services or productive services needed by the firms to carry out their activities. So this is indicated by this arrow. We also find that these business firms will have to pay for these services provided by the household in forms of wages. Likewise, having produced these business firms, whatever output they have gotten will be transferred back to the household for consumption in forms of produced goods and services. And what should the household do in turn? Having been provided with goods and services, of course, it should be payment made for goods and services. Our answer here is A. Question 28. A change in quantity supplied of a commodity is influenced by, just like the question we saw in the last two slides, a change in quantity supplied of a commodity is influenced by only the price of the commodity itself. Now, to draw to describe clearly the difference between a change in quantity supplied and a change in supply, we can look at them in form of two distinct curves, curve A and curve B, all having the supply curves. In curve A, we will illustrate a change in quantity supplied, and in curve B, we'll briefly explain the change in supply. So, remember that we said earlier that it is only the price of the commodity itself that brings about a change in quantity supplied. So in this situation, if the price of this product is P1 and the quantity supplied is Q1, for any reason, if the price changes to P2, we will also see that the quantity will increase because of the increase in price to Q2. This is so because price is an incentive to producers. The higher the price, the more producers want to produce and make more profit. However, for a change in supply, all other factors aside from the price of the commodity itself will be an influencing factor. So we find that at the same price, say P1, different quantities could be supplied at the same price. Perhaps due to efficiency or inefficiency of labor, it might increase or decrease. Due to the price of competing or other commodities, the price will remain the same, while the quantity supplied can also increase or decrease. So at P1, we are having different quantity demanded, say S1 here and S2 here. Either it is going backward or it is moving forward. Question 29. From the table above, calculate the elasticity of demand. First, we need to remember our formula for elasticity of demand. which is given as the percentage change in quantity demanded as a result of the percentage change in price. We will first of all determine the percentage change in quantity demanded, also determine the percentage change in price, and then impute their answers to substitute and get our final answer in the equation. For percentage change, in quantity demanded, we have the old quantity, the new quantity, Q2, minus the old quantity, Q1, all over the old quantity, Q1 times 100 over 1. And for the percentage change in price, a similar formula will also be given. Percentage change in price is equal to the new price, P2, minus the old price, P1, all over the old price, P1 times 100 over 1. Substituting into the formula. From the table, our new price is 16. The new quantity is 16. The old quantity is 20. So we have 16 minus 20 all over 20 times 100 all over 1. Solving this, we will have minus 4 all over 20 times 100 over 1. However, having solved, our answer will be minus 0.2. But we will ignore the negative sign because in economics, the signs only give us the direction and are of no consequence in our calculation. All right. For percentage change in price, the new price is 8, the old price is 5. Likewise, substituting into the formula, 8 minus 5 all over 5 times 100 all over 1. We will have 3 all over 5 times 100 over 1, which will give us 0.6. So at this point, substituting them into the main equation, percentage change in quantity demanded is 0.2, percentage change in price is 0.6. All right. Price elasticity of demand will be 0.2 all over 0.6. When you calculate this, you will get the answer 0.33, which gives us C as our answer here. Question 30. One of the functions of money deposit bank in economic development is money deposit bank provides credit facilities to businesses. It is only the central bank that serves as banker to the government. Only the central bank formulates monetary policies as well as issue currency. Hence, our answer is B. Question 31. One of the arguments against the practice of monopoly is monopoly is a situation where a single entity or business is in charge or has the capacity to produce a certain good or service which do not have close substitute. In that situation, if a company has the ability to produce what other companies cannot produce, there is a chance of exploiting their customers through high prices. So our answer here is C, exploitation. The main reason why countries engage in international trade is countries engage in international trade because of the difference in their endowment. Different countries are gifted with different natural resources and there is a need for exchange. Hence, our answer here is C. Question 33. From the table above, what is the value of X? We find that under the total utility, the value of X is to be determined. In order to get this, we simply add the preceding value before X with the exact same value on the same line, which is 3, under the marginal utility. In this case, we'll be having 29, the value preceding it, plus 3, which is the value on the same category with X, and this will give us a total of 32. Hence, our answer will be A. Question 34. From the table above, it can be inferred that there is, so we still look at the utility schedule above, the total utility has been given, and the marginal utility likewise have been given. From observation, you find out that when 1 unit is consumed, the marginal utility is 10. When the second unit is consumed, the marginal utility is 5. And it keeps on reducing or diminishing as more quantities are consumed. Hence, this gives us a typical example of diminishing marginal utility. Hence, our answer here is C. Question 35. A well-conducted census is important for population census is the enumeration of persons residing within a given geographical location at a particular time, and this is very important for the government in order to plan the economy. Hence, our answer here is A, economic planning. Question 36. The cost-saving advantage which a large firm can achieve on its own is called, these cost-saving advantages are referred to as internal economies of scale, provided it results from the capacity of the firm within to be able to create opportunities to help it maximize its profits or its benefit and to minimize its cost. So it is A, internal economics of scale. Question 37. A country uses the foreign exchange control measure to eliminate balance of payment deficits by, how does a country eliminate balance of payment deficit? Any country wishing to eliminate balance of payment deficit must ensure that the amount of money it pays for its import is less than the amount of money it receives from the export it has made. Hence, the country should be able to limit her exports to its currency value of imports. That will give us the answer A. And finally, question 38. The role of IBRD, the International Bank for Reconstruction and Development, as an international institution is to, the role of the International Bank for Reconstruction and Development is to facilitate the development of infrastructures in member nations, just as the name depicts. So our answer here is C. And this brings us to the end of this episode of the 2017 UTME. Thank you very much and see you in the next video.